Mega YouTuber Coffeezilla just exposed one of the most complex Ponzi schemes of the decade. But it's not over yet, because after the Ponzi ended, some of the funds managed to squeeze a few extra wire transfers from their customers.
And then I restarted another company, I grew a little back, and then I make millions of dollars trading.
But he did not make his millions trading. It was from scamming people out of $14 million. And where is Ted Safranko? And will he actually get away with his massive $500 million fraud? Let's not forget about Raja Banks, a former member of the Forex family who is running his own white label broker using the same software that Ted Safranko swindled millions of dollars.
What makes this scam so different from anything else out there is that investors did not know where the money was going. They did not know this was going to traders' domain. People who actually invested thought they were putting their money into their friend's fund, this fund that was established in the US. People were wiring money to a US bank account, and so nobody thought anything fishy about it.
While the unlicensed commodity pools created by Holton Bugs, Meta Labs, Algo Capital, and Centurion Capital raked in millions of dollars in the forms of wire transfers and crypto, it begs the bigger question. If the money was not sent to Algo Capital, did they pocket the money, or were they actually colluding directly with Ted Safranko?
It's clear when you look at things that these guys were not worried about the withdrawal delays. They knew about them and they didn't disclose with investors, because if you look at this post in January when there were clear withdrawal delays, Alex Santi was out buying a watch and enjoying his life. Meanwhile, he had customers trapped with $14 million. And according to Safranko, Centurion Capital was one of the smaller funds that brought in money.
All right, 30 grand in profit with the mastermind students live.
And $14 million is no small amount of money. But you have to look at the funds also and realize they had back-end access to traders' domain, because they were creating logins for their clients on MetaTrader 5. You can't do that without back-end access.
A recent lawsuit brought against Algo Capital shows $3.5 million in principal stolen from their clients. However, based on the amount of people who invested over $1 million in this scheme, we realize this is only a fraction of what their fund brought in.
And I think the scary part in all this is we are talking about wire fraud at this level because of the amounts and the way that these funds deceive their customers. We are talking about these groups did not disclose where the money was going and that it was going to traders' domain, even when traders' domain was having issues. These funds continued to pull in money from their investors because all they saw was dollar signs and quick money coming into their bank accounts, coming into their LLCs. We're talking about federal crimes at this level, and if you look at the definition wire fraud, it meets that criteria. For many of these funds, mainly Algo Capital, Centurion Capital, Holton Bugs, and Meta Labs, these guys most likely committed wire fraud.
The biggest difference between the traders' domain scam and other Ponzi schemes like Novatech FX or other get-rich crypto funds is that investors believed they were sending funds somewhere else. Investors who sent money to Holton Bugs, Algo Capital, and Centurion Capital never even had access to the traders' domain website.
I believe as the investigation continues and the money trails followed, we could be looking at a billion-dollar fraud in principal investments, because if you look at Algo Capital, which was confirmed by the CFTC, they brought in $145 million, but then you have all these other funds that acted as their own hedge funds that never sent money to Algo Capital. Where did that money go? Did they pocket the money? Did they send it to crypto?
With the collapse of traders' domain, we want to help people avoid Forex scams in the future. We believe you should avoid these Forex gurus like Raja Banks, Alex Santi, and Q Banks. The first red flag is look at the broker they trade on. Is it regulated? Does it have a good track record, or are they affiliated with the broker?
That is the first red flag, especially with Raja Banks. He uses Dominion Markets, which is a B-book broker. Also, the same exact software that Ted was using, which means he can manipulate his results. He can manipulate his winnings. He can show a little bit of value, and a lot of these gurus will show only their winnings or a little bit of value. They'll show a couple losses here and there, but they don't really show what happens off screens or when they blow an account, because Forex is highly leveraged and it's very easy to blow account when the trade goes in the other way.
I already had lost 100K, 180K, and then I had 100K to my name, and I'm like, fuck it.
You can't fully trust FX books. A lot of algorithms and trading bots will show FX books that are modified because they own the broker or know the person that owns the broker. So they create these track records to entice investors to deposit into their offshore bucket shop or purchase their trading indicators.
And you have to avoid these gurus who are flashy, especially on Instagram. You look at Ted, and he was never flashy, but he knew that he could use people like Santi and people like Qbanks who advertise their lifestyles to draw in a large customer base. And a lot of these guys, what they do is they're dependent on their signals and their courses.
It's best to avoid anything Forex gurus advertise, and if you are a member of Dominion Markets, we highly recommend you withdraw your funds and use another broker to trade on. Otherwise, your funds are at risk.